Brazil is the leading South American economy and most populous country in the region. Brazil's climate and geography make the nation a significant commodity producer. In the world of soft commodities, Brazil has a dominant role. The country is the world's leading producer and exporter of three of the soft commodities that trade on the Intercontinental Exchange, ICE. Conditions in Brazil determine the price path of Arabica coffee futures, free market sugar futures, and frozen concentrated orange juice futures. While Brazil is the leading producer and exporter of coffee beans, sugarcane, and oranges, it also produces a host of other commodities. Meanwhile, the bullish trends in the raw material markets since the 2020 lows mean that Brazil's cash flow position is improving. Higher commodities translate to rising tax revenues and increasing corporate profits. The real, Brazil's currency, has been a basket case as political and economic scandals have weighed on its value against the US dollar for years. Events in 2022 could change the bearish path of the real as the commodity rally supports a higher level for the currency in the coming year. Consolidation in 2022. After making lower highs and lower lows since 2011, when the Brazilian real traded at the peak of $0.6517 against the US dollar, the currency relationship reached a low of $0.16756 in May 2020. In 2021, the real versus the US dollar foreign exchange rate has consolidated near the low. The real traded in a range from $0.17008 to $0.20413 in 2021 as of December 30. The exchange rate was sitting near the low at the $0.17933 level one day before the end of 2021. While the price action did little to end the decade-long bearish trend, 2021 was a consolidation period for the Brazilian currency as it searches for a future path of least resistance. Brazilian soft commodities soar. Brazil is the leading producer of three of the five soft commodities. Coffee, sugar, and FCOJ futures all posted impressive gains in 2021. Moreover, if the real begins to appreciate against the US dollar, it will increase labor and other domestic costs, pushing prices even higher in 2022. Brazil also produces a host of other raw materials, which have appreciated in 2021. The pandemic and the weather were problematic. A July 2021 Brazilian frost devastated crops, causing rallies in coffee, sugar, and orange markets. Weather conditions are always a primary factor for the path of least resistance of prices. Simultaneously, COVID-19 wreaked havoc in Brazil, with the third most infections and second most fatalities. As of December 30, nearly 620,000 Brazilians lost their lives because of the virus, which created labor and supply chain issues throughout the year. The weather, virus, and rising global inflationary pressures created a nearly perfect bullish storm for Brazilian commodity prices in 2021 and look set to continue the patterns of higher lows and higher highs in 2022. President Bolsonaro is up for re-election. On the political front, President Jair Bolsonaro will run for re-election in 2022. The far-right leader has faced mounting criticism over his handling of the pandemic. Brazil's economy has not recovered, so he will likely face stiff competition in the election. He recently said he would either have another term, wind up in prison, or be dead after the election. A contentious Brazilian election could cause lots of volatility in the real versus the US dollar currency relationship in 2022, which will impact soft commodity prices. Will Brazil follow Chile? Chile, the world's leading copper-producing country, recently elected a socialist president. Copper prices have soared in 2021, reaching a record high in May and trading over the $4.40 per pound level on December 30. The Chilean election will likely impact the copper market, already suffering from a supply-demand deficit. Increasing global copper demand could widen the supply deficit if Chile nationalizes mines or increases regulations and wages to a point where supplies decline. If Brazil follows Chile and elects a socialist government, it could cause extreme volatility in the Brazilian real and soft commodity markets. A socialist wave sweeping across South America would have a destabilizing impact on raw material and agricultural markets. The Brazilian real consolidated near the lows in 2021. We could see a far wider range in the currency relationship against the US dollar in 2022 as inflation, the pandemic, supply chain bottlenecks, bullish trends, and local politics create a turbulent future for the currency.